Well, good morning, everybody. My name is Matt Gwin. I'm with the Farm Service Agency. I'm here out of the state office. I'm a program specialist here. I really hate I can't be there in person. Number one, I'm from Winsboro, Louisiana. Started my agricultural career there at that research station under Dr. Leonard and Dr. Pageant. So I really enjoy coming back and visiting everyone when I can. Number two, like I said, I'm from there and nobody cooks lunch quite like mama. So I'm missing out on that today. But I do want to jump in and start talking about the Farm Stores Facility Loan Program. Usually when people think about Farm Service Agency, they're thinking about direct payment programs or maybe operating loans on the farm loan side, disaster assistance program. But this program right here doesn't get a lot of outreach on, so I'm glad I'm able to talk about this today. And let's jump right in. What is a farm storage facility loan? Well, farm storage facility loan is a low interest financing option for producers to store, handle, and or transport some eligible commodities. With this loan, we can acquire, construct, or upgrade new or existing farm storage facilities. We can acquire portable or permanent affixed storage and handling facilities. And I'll get into some examples of those here in a minute. And we can acquire new or used storage and handling trucks. Who is eligible? Okay, an eligible borrower is any person who is a landowner, landlord, tenant, pretty much anybody who has a share in one of the eligible commodities. And I'll cover those eligible commodities here in just a second too. Some other eligibility requirements: the borrower must show repayment ability. They must demonstrate a need for the storage, for the capacity they want to build. And I'll explain how we calculate that here in a minute too. We must file an AD 1026 at the county office. Anybody who's dealt with the Farm Service Agency has probably had to fill this form out at one time or another. We'll need to have an acreage report on file for the commodity that we're building a storage facility for. We must provide proof of multi-peril crop insurance and also insurance on the structure itself during the time frame of that loan. And we must have a CCC 902 on file. Most of the producers out there know of this as the farm plan. We must have a farm plan on file. Okay, what is eligible? Now, I know today we're talking about corn predominantly, so corn is definitely eligible, but I wanted to throw this up there just to show you the broad spectrum of different commodities that would be eligible for a farm storage facility loan. Some worth mentioning would be hay. We get a good bit of interest for that. Some vegetables, cold storage for vegetables. I'm down here in Alexandria, so cold storage is a hot topic for some of these crawfish farmers down here. So again, just a wide variety of different commodities that would become eligible. What facilities are we talking about? Of course, today, since we're talking about corn, grain bins and silos is our predominant topic. Again, hay barns, that's another popular commodity that we get requests for pretty often. Now, I wanted to point these pictures out. These are some of the equipment that could be eligible. So now I've built bins with this loan where we included all this at once: the bin, the drying, the augers, all that was up under one loan. But if you already had grain bins established and you wanted to upgrade, you wanted to buy some dryers, or you wanted to buy some new equipment to be able to load and unload at that facility, to upgrade that facility, the farm storage facility loan would be an option there. Monitoring equipment. If you wanted to install monitoring equipment at your grain bins to be able to get a quick readout of moisture levels, temperature in that grain bin, they would be eligible for this loan as well. Now at the bottom here, I included this hopper bottom trailer. Earlier I mentioned storage and handling trucks, okay? Truck is kind of a tricky word. So in this situation here, the hopper bottom trailer is eligible, but that truck to hook up to that hopper bottom trailer would not be an eligible item for this loan. When it says truck, if it was the old bobtail truck where we're looking at one axle, one frame, the truck is attached, that would be eligible. But anyway, we get a lot of requests for these hopper bottom trailers through this. Grain carts, pretty much anything that handles that commodity between the field and while it's in storage would be eligible under this program. Again, just listing a lot more things here that are eligible. Electrical equipment, all the electrical stuff needed to run those grain bins. Safety equipment, if you want to install that spiral staircase around those bins instead of that ladder that just goes straight up and down, that could qualify. Harness equipment for people going inside those bins, that could qualify. Again, down here, cold storage, hay storage. All facilities and upgrades that are financed under this loan, they must have a useful life for at least the term of the loan. And I'll get into some of those terms here in a minute as well. All right, now let's talk money. There will be a non-refundable $100 applications fee is due when the application is filed. Okay, we have a standard loan and a micro loan. So under the standard loan, the down payment would be a minimum of 15% of the cost of the structure. Now here's some terms here. $100,000 or less, we're looking at 3, 5, or 7-year terms. It also depends on if we're purchasing new or used. If it's new, these terms right here apply. If it's a used structure, no matter which dollar category it falls into, you're going to be looking at 3, 5, or 7 years for used equipment or structures. Okay, 100,000 to 250,000, 3, 5, 7, or 10-year terms, and then 250 to 500, the same 3, 5, 7, but also a 12-year term is available. Okay, our interest rates change every month. Every month, we get a notice from National Office that publishes the interest rates. And toward the end, I got a slide that will show you what the interest rates are for January, for this month. Okay, now the process of this program, you'll file an application, and once that application is approved, the date it's approved, that is the month it will look at an interest rate. So if you file the application in January, but say it doesn't get approved till sometime in February, we're going to use the interest rates in February. So whatever month that application is approved. I'm sorry, the maximum loan limit is $500,000 per loan per borrower. Now I mentioned microloans. Microloans are also available. These are for loans totaling $50,000 or less. You'll have that same $100 application fee, but the down payment is going to get reduced to 5% instead of 15%. Under the microloans, the only terms we have is 3, 5, or 7 years under the microloan portion. The interest rates would be the same. Whatever month that application is approved, those are the interest rates that'll tie to it. Here are those interest rates I was talking about for January for a 3-year term, and that is correct. That is a decimal there, 0.25%, 5-year 0.375%, the 7-year 0.625, 10-year, and then 1% on the 12-year term. This interest rate will be for the life of the loan, and again, it goes into effect the month that loan is approved. Now, I wanted to point out, these interest rates look great, but I also want to point out, I want to be upfront and honest. This is a government program, so there is red tape involved, and the process is usually a pretty lengthy process. So just keep that in mind, especially if it's a grain bin facility you're wanting to build. You know, you're thinking, oh, it's, you know, May, when we harvest this year, I need some bins. Well, if we come into the office and request that loan, it's a good chance we're not going to be able to get everything finalized and built by that harvest season. So if it's something you're thinking about, I would definitely get into the office as soon as possible to begin this process so that we can move forward. One of the things that has to be done in the process is an environmental evaluation on the property. That's usually what takes some time, because we have to contact what we call SHPO and TIPO, you know, any Indian tribes that could possibly be in the area. We have to contact them and give them a 30-day period to be able to respond, you know, telling them that we're constructing a facility in that area. And usually that takes some time to get that process done. So if you're interested in the program, just contact your local county offices immediately to get into the details, make sure this is what you want to do, and so we can move forward with the process. Okay, items required before the application is approved. Once we get that application on file, there's some documentation we'll need to process a CCC 10. This is just an authority for us to be able to file a UCC 1 on that structure. These two forms, FSA 2037 and a FSA 2038, these are financial forms that we'll need for credit worthiness. Now, we'll point out that if you're already working with a bank in the area, or if you're working with the Farm Service Agency to obtain funding for an operating loan, they most likely already have this information that would be on these forms. So if you can get your hands on that information, it would knock out having to fill out these forms, getting that, you know, cash flow and balance sheets from when they were doing it for your operating loan. We'll need to have legal descriptions and a plat map for the piece of property that we plan to build the facility on. Of course, if we're doing this for some handling equipment, we wouldn't need legal descriptions or plat maps for that. If you're applying as an entity instead of an individual, we'll need entity documents. This is more for that farm plan I talked about earlier to fill it out correctly. We'll need to go ahead and get a building plan of what we plan to do out there and cost estimates. Now, this storage need calculator that I talked about earlier, under the farm storage facility loan, we're going to see, well, what kind of need for storage do you need? We're not just going to use the program to build bins if that producer doesn't need those bins to store commodities. So the way we calculate this is we look at your history, usually about a 3-year history on your 578. So let's say you say, I want to build some bins to store corn. We'll look at those 578s, and let's say over the past 3 years, you've planted an average of 500 acres on corn, okay? Then we look at, we can either look at your average yield, or we can look at the county maximum yield that's set for that county. And let's say it's, you know, 108 bushels. So 500, let's see, let me get my calculator. I had this figured out earlier. Find where my mouse is. So you take that 500 acres of corn times that 180 bushels. So that gives you 90,000 bushels. Now for the program, we're going to multiply that by 2 because a worst case scenario, you could potentially have 2 years worth of crops you're trying to store. So that gives you 180,000 bushels. So the storage need calculator tells us that when we look at the facility we're going to build, as long as it's under an 180,000 bushel capacity facility, we'll loan money to help build that facility. I hope I didn't get too confusing there. Okay, another, like I said, explaining that, hey, this is a government program. There is some red tape, and the process is a little cumbersome. This doesn't work like a traditional loan where you come in and apply, you get approved, the money's dispersed, and then you go build your bins. The way the process works is you come in and apply. We do that evaluation review, environmental evaluation. And if your application is approved, that's the starting date of when you can begin construction. Okay. Construction has to be complete, and FSA has to inspect that facility before we can close the loan. And then once the loan is closed, the money will be dispersed. So it's almost like a reimbursement loan instead of getting that money up front. To help out with some of the cost in that, I'm sorry, I jumped ahead. To help out with some of the cost in that, there is potential to do a partial disbursement halfway through the process. If we do a partial disbursement, we'll disperse funds equivalent to what has been built so far, but at a maximum of 50% of how much we requested in the beginning. So you can get a partial disbursement halfway through the loan. What will happen is this will actually create two different loans, a partial loan and that final loan disbursement. So you'll have two different repayment dates, but they'll use that same interest rate that we locked in at the approval of the application. Installments. Farm storage facility loans are payable in equal annual installments of principal and interest over the term. Methods of payment, just like anywhere else, just about cash, debit card, money order, personal checks, and if applicable, we can collect that payment through a set off or an assignment of other payments that come through the office. There's no official grace period built in, but we do have policy, and there is procedure to be able to extend that due date depending on the circumstances. And then farm storage facility loans may be paid in full or in part at any time before maturity without penalty. Guys, that was a pretty broad, high-level overview of the program. Of course, there's more details depending on what type of loan you want to get. What are you going to do, a facility or storage and handling equipment? And your local county office should be able to help you out with those details. But that's the end of my presentation today. Again, I know it was a very high-level overview. So if anybody has any questions, I'll try to answer those now. If not, here's my contact information. Please feel free to contact me at any time.